Welcome everyone to Macro Matters. This is our bi-weekly conversation about macro events that matter for our members in the finance industry. Today is almost the last day of the year. It's December 30th, and I have with me again Rich Excell and Tony Zhang. They are both of the Geese College of Business at University of Illinois. Today, I thought we would do something a little bit different. Instead of talking about what has happened the last couple of weeks or other very macro topics that we tend to want to hit on, we're going to give our thoughts and give you all an overview of the great things that we've done with the group. This is the Education Advisory Group at Chicago, at the Chicago Society. We do both events. A lot of the events, or all of the events during the pandemic now, have been online, but we also have our podcast that we're really excited about because it's grown a lot and we're getting really good traction and some really good episodes on that. So to give you a flavor of what are the kind of things that you may have forgotten having been at these events, having listened to the events, as well as what you may have missed if you haven't. So let's kick it off. Actually, I thought we would start with podcast, and really we have our podcast star here, Rich. You've done so many podcast episodes. You're so good at it. And I would like to see if you want to just start with any highlight of the year that you've been thinking about in terms of your experiences from doing podcast, and we'll take it from there.
Lotta, thanks for having me. Yeah, I'm not the star. The star of the podcast are obviously always the guests that we have, because we've had such amazing guests this year and covering a range of topics. I mean, we've talked about how we've had a number of different podcast series that we've done, whether it be ESG or DeFi, et cetera, and we can get into that. But I think what I wanted to really draw people's attention to is some of the one-off podcasts that we did that I would kind of lump into a category I would call market risks. And I think that's something that, especially as we might be embarking on a central bank tightening into 2022, when that's a period when, frankly, a lot of risks sometimes come to the top, that this might be good for the members to look at this and think about this. It started, it's things such as the one I did with Dean Kernut, who's a market historian, that talked about all the different market risks that he's seen throughout his career and how there's some similarities and some differences. We did the most recent one with Jim Timmons on Enron, which I think is phenomenal, that everyone really should listen to, because it's these types of major events in the market that really can kind of make or break your career. And I think Jim does a great job of really walking us through what happened and why. Or even the one with Peter Zeihan on Disunited Nations and all of the geopolitical risks out there. But I think one of the other stars of the Risks podcast was Tony Zhang, who we talked about China, we talked about monetary policy and market stress. And so, Tony, I would love to hear your thoughts on some of these risks, because you were one of the esteemed guests on these.
Yeah, thank you, Rich, and thank you, Lotta, for having me. And it has been a great pleasure, basically, for us to cover the final episode of podcast for year 2021. I think it's always very interesting to wrap up a lot of great contents, especially the topics related to the CFA charter holders. As one of acknowledgement, even though on behalf of all of the charter holders, I think both Lotta and Rich, you have done a great deal. And a lot of the contents that once I actually look into that, actually they are very informative. So actually, other than just talking about maybe some of the topics, for instance, the Chinese economics, I will also take this opportunity later on to ask you, both of you, to maybe give us some kind of feedback. But first of all, as Richard have asked, so I would like to offer some of the update over the Chinese economic risk. Now, as we actually approach to the end of this year, a lot of things happen both in China and US. From China's perspective, we have seen lots of consolidation from the economic developments. Like central bank in China actually lowered the requirement or the barrier for the reserve, trying to stimulate the economy for soft landing. while on the other hand, they actually has taken a very extreme measure to counter to taking some measure for antitrust, trying to prohibiting the company from, or big tech company from becoming too monopoly power, over leverage their monopoly power. So those mainly two factors together has major impact for both U.S. investors and Chinese investors as well. And this will be something that we will need to keep monitoring closely over the next couple months, or even over the next 1 year. The globalization process still in place, still, I think at this moment, still a big question mark. We see the supply chain issue, which has a huge impact to almost every one of us in the US and in China as well. The holiday season seems to be great, and we have seen a lot of the consumers continue to spend heavily, but we do see the huge inflation, which has become a big topic for Federal Reserve here as well, right? But I don't want to get into this too deep into this kind of a joint topic, but I would like to take more as an opportunity to maybe give our charter holder some kind of opportunity to reach to two most of knowledgeable person this year, Rich and Lotta, if you don't mind. Okay, Rich, as you have done so many podcasts related to the topic, ranging from DeFi, ESG, impact investing, economy. What are the actually maybe the top 3 topics that you really think that really impress you coming into your mind at this moment?
Well, I think the biggest topic, and it's a topic that's going through, of course, all of the marketplace, but also, of course, the CFA Institute and the CFA Society Chicago, is ESG. And we did a big, long series on ESG, exploring it from every asset class's perspective, from an asset owner or an asset manager perspective, and even had some skeptics of ESG investing on there as well. And I think that this is something that's going to be an important part of everyone's career for the next several years, if not longer. And so for those who are really still kind of getting up to speed on how bringing an ESG mindset into your investment process can and should be important, I think there's a number of different, there's probably a podcast for just about anybody, and no matter what your asset class is. We've kind of followed that up with a similar topic on stakeholder versus shareholders. That's certainly something with all of the concerns of income inequality, et cetera, and the issues of social justice that have really been powerfully through the market the last couple of years. We talked about the stakeholder versus shareholder. There was, the last year was the 50th anniversary of Milton Friedman's famous piece on maximizing shareholder value. And we had a couple professors from the University of Chicago on defending Milton Friedman's position, but we also had one of the leading voices on stakeholder theory. And what you find is that there is a common ground to be met there. And so it doesn't have to be a very divided or bipartisan view of how we should be approaching this, but there is a common ground of how we should all be kind of thinking about this again in our investment process. And it might be strange to think of, but I think a lot of that stakeholder versus shareholder mindset is really kind of going through what I think is the third biggest theme that we did this year, which is on decentralized finance, or DeFi. It's not just the blockchain and Bitcoin and the excitement around the large price moves in the digital asset space. It's really a lot about what you're seeing especially with smart contracts and decentralized finance, is the idea of this tokenized business model really rewarding all stakeholders and not just a few shareholders or a few owners of the firm. And it's that kind of almost populist mindset, if you will, that is really kind of leading to a lot more enthusiasm for the space. And we saw this year, especially, things such as Ethereum and all of the coins built around the smart contracts really kind of take off and kind of leave Bitcoin behind a little bit. Bitcoin was dragged up a little bit with it, but 2021 was really a year about decentralized finance, smart contracts, and Ether blockchain instead of the Bitcoin blockchain. And I think that has a lot to do with that stakeholder versus shareholder mindset again. So I think those were probably, to me, the biggest themes that we did, the biggest themes we covered. And we tried to cover it from every perspective that we could. Again, always trying to get a cynic on the podcast as well, because you want to really ask questions from both sides of it. And that to me was like the most powerful thing. And I think those are themes that are going to be with us going into the next year as well.
Yes, Rich, I think these are great topics. Probably we can maybe cover a little more later on. So right now I try to switch the token to Lotta. Lotta, what might be the 3 key themes that you think or you like this year?
Well, I would definitely say, just because Rich did talk about DeFi here, and it's very much a key one for me too. I think we are planning right now an event on this topic, and so everybody should look out for that. I think we should, and we want to, and have all the reasons to dig deeper into this space. I think it's going to take over a lot of parts of finance. We don't know which yet, and that's for us to find out. It's going to be really relevant for anyone in this space, for our members, and it's fun and it's interesting and it's new, and there's no reason for us not to. We can't expect, right, the CFA Institute always to be the ones that want to dig into these. Like we're small and we can be nimble and we can be a little bit more radical than a lot of others out there in this and spread this to our members. So that's definitely, it's really great that we've done podcasts, and now we want to also do, we can do more podcasts, and we're going to want to do events on it. So things are really fascinating. In a year, Rich saying that, oh, it's now Ethereum rather than blockchain, the Bitcoin blockchain, it's going to probably sound super obsolete, and whether it's Solana or something else having taken over, it is a lot of stuff happening out there. We have the whole metaverse thing, Web 3.0 that people are talking about, and we want to be able to digest that in a way that is relevant for our members, and we want to do that. When it comes to then a couple of my own favorites when it comes to the podcast, that among the ones that I've done, when I thought about this when you were talking about it, one, I would definitely say we've had actually John Reese on, who is a commodity investor, twice. Rich interviewed him, and then I did, about first kind of overview, and I got into a little bit more of the technical stuff. And I really like that one because it is an area that you can really learn something from scratch, but you can get pretty technical without having the background, and it's so interesting. It affects what you do regardless of whether you are doing other kind of equity investment, fixed income, whatever. It's really good to know. Like I just like that topic, so I think anyone should go and listen to those, because it's just so informative, and I thought he did a really good job of laying out both from the basics to the let's get into the nitty-gritty of how you actually do this and why it makes sense. What are the technical components? So I really like that conversation. And another one of my favorites among the one that I did is definitely Roger Ibbotson, who's a professor at Yale. And he has been writing so he's more on the academic side, and I'm more academic minded. So our minds meet there very much about the connection that he's been doing in his research between economic growth and equity returns. And you can think of this as several steps, right? Like why would there should be a connection? Well, economic growth leads to earnings growth that then leads to equity returns. But what parts of equity returns? Is it the dividends? Is it the buybacks? Is it that then feed into the capital appreciation, the value appreciation of the firms that you're investing in? And getting really into the nitty-gritty of that, I thought was really interesting, because he's such a big brain on this. And I think that what surprised me there, when I think about it, in terms of why is that an interesting theme, is a lot of people are into investing in the space. And we think anything equity, I would say, this becomes relevant in that a lot of people just swallow as automatically what is generally being stated out there as, well, buybacks are this, or new issuance, well, that's dilution, so you have to just do this with it. And it's people who make the claims usually sound so smart, and it's often not being disputed. But when your eyes get open from the kind of conversation I had with Roger Ibbotson, you can actually start questioning what people are actually saying about what the implications are for a stock's value from a dividend part versus a buyback, and how to actually think about this in a very high level way, but it actually comes relevant. So I just love that, to actually think about it, because I like to think about in depth, like what are we actually doing here when we're putting our money in different places? What do we actually believe in are the fundamental drivers for how we're actually getting our returns there?
If I could add something, I think that's what's really kind of interesting is that for those of us that maybe got our charters before 2000 or before 2010, or maybe in a lot of cases even before 2015, the test has changed so much that some of these topics that we're talking about, be it ESG or blockchain and decentralized finance, are now parts of the CFA exam, especially ESG, which is about 7 to 8% of the current exam. And so I think when our members are looking at how can I do some continuing education to, first of all, get my CFA credits for that, but second of all, just keep my skill set upgraded. There are things that we're talking about here that we're doing in our live events and our podcasts that will not only are interesting, but really bring our charter holders up to speed on what's being covered on the exams these days.
Yes, I agree with you, Rich. I think the ESG sustainably investing, I think, and also impact investing has become a huge topic, especially for the investor related to institution, and even maybe younger generation like in Millennium or Generation Z, who are very savvy or very care about this kind of information or this kind of factor. I think that's something that would continue to attract the attention from investors over the next couple of years, and even maybe attract attention from the regulatory agency and government as well. I think those are great topics. I would like to maybe slightly get deeper into one of the topics that Lotta just actually mentioned, and both of you have already covered, the commodity. So commodity actually is related to the inflation, right? And we all know inflation has become a centerpiece for central bank going through the end of this year. Do you think the commodity might still become an interesting asset class over year 2022 from both of you?
First, I think there's a couple things there to talk about with commodities. I think the first thing is what Lotta mentioned in her podcast with John Reese, and in talking about the kind of the technical aspects of it, of what it takes to invest in commodities, and oftentimes what it takes to invest in anything with the futures market. And that is right now how a lot of institutional investors are accessing markets, even such as Bitcoin and Ethereum. They're using the futures on the CME group, and so they really need to know what, from an experienced commodity investor, the types of things that they need to know, and even apply them in something like a new idea, such as digital assets. But I think you hit at the core of commodities and what commodities have become particularly relevant again this year, and that's inflation. And inflation has been a powerful theme throughout the year, and inflation is something that is really going to probably dictate the course of asset class returns for 2022, whether or not the central banks lose control of it, or whether or not the central banks have to be aggressive in controlling it, or whether it's just transitory, as everyone said all along. It has a tremendous impact on asset allocation, on asset class returns, et cetera. And so commodities as that kind of tail risk hedge on an inflation is certainly something that people should consider. But I think also when you think of, most people, when they think of commodities, they think, oh, this might be oil, or this might be gold, or something like that. But increasingly, if you're looking at the electrification of the economy, a lot of the commodities we're talking about that are even tradable commodities are those that kind of go into batteries, or they go into electric vehicles in some way, or they go into semiconductors and other components. And so there's a lot to really learn from just a broader topic of commodities and how that kind of plays into a lot of the components of today's 21st century economy as well.
Yeah, I think one theme, as you say, not to forget, is how a lot of the minerals and all of that is going to be driven. So when we think about an equity market, right, it's not just about the energy sector, it's also about the materials. And I think a big theme going in the next few years is going to be figuring out to what extent this whole climate agenda is going to be pushed through, and therefore how much of those materials that you want. Because if you're going to build windmills and things like that, you need a lot of copper and you need a lot of other materials, which is quite energy intensive, of course, to produce. And so I think that's going to be a big theme. And one reason also, I think, Tony, why I do think that commodities is going to be important and something to watch is like, if I just think about the fact that every year, and if you think about the span of 2 years back, you have always a lot of new people coming into the market and they want to make a career in finance. And I think that any environment, how markets react to things is path dependent from what the people have experienced who are in the market today. And we now have the pretty kind of sexy environment for commodities, and that like, oh, they went down and went up and you could make a lot of money. And I think that like if we would have asked us 2 years ago, it would have been more like, oh, people are probably losing interest because basically like energy sector in the US is just going down and down and down. It was just treading. It was just kept sliding. And now there's just been clear that you can, if you time things right, you can do things with it. So I think that there will be a lot of focus on various commodities, not even only oil. I think the question about the climate agenda there, uranium is going to be an interesting one to watch in the sense of like, what are the dynamics of this climate agenda, where to what extent you need to rely on nuclear for that to happen. So in those ways, I think it's definitely going to be, I mean, good and bad, right? Because it's going to be a lot of different views, which is going to be interesting, right? People are going to want to be right, and there are a lot of gloomy people in the sense of like people saying no, well, because we're transitioning to another new world, you should not be in like at least in the energy space, they would say. And then there'll be people on both sides. It's going to be interesting to see who comes out being most correct.
Yes, I think that's very true. We definitely look into this kind of things from two different angles. That actually lead to another question that I actually find it also very interesting as well, especially related to one of the podcast series that a lot of you have done. It's a capital market expectation. As what we have known that capital market is an aggregated market with a lot of participants. So from game theorist perspectives, well, we typically not only need to care about the fundamental, but also need to care about the sentiments within investors as well, right? That's another key things that Rich has spent tremendous amount of time doing this almost on a daily basis. So a lot of, from capital market expectation point of view, what do you think investors should pay attention to in year 2022?
Yeah, well, I can start by just saying that it's good that you mentioned it, because this is, I want to highlight that out of the events that we've done, this has been very much the series that's been running throughout the year. It started in 2020, but there's some really good stuff that we have there. And I would mention there, we actually have a little bit more on the blockchain theme. We did have a cryptocurrency event, which I thought was really good. And I think that the micro market structure is another one that we had when you're talking about the sentiment stuff. And that panel actually got into a lot of having to talk about passive versus active and what kind of the good and bad of both. And again, I get back to this, like, it's so interesting when we can get it. These are old questions, nothing new about thinking about passive and active. You bring in these smart people, right? And you realize that they don't agree. And there are a lot of things to be worked out here and understanding, like, and these are the big questions, like, should I go active, passive? How much, how then do I understand it? So, so when it comes to the event, and this is of course the actually panel events, right? That we've been talking about podcasts, but we also have done several panel events, all online so far because of the pandemic. And so those are kind of themes I think have been really good. We had one on real estate as well, for example. Yeah, for 2020 capital market expectations, I think it's hard. I think we're gonna realize what risks are lurking, I think, after an unprecedented period of stimulus. And whenever you talk about somebody high level from the macro view, I think you get exactly this. You get different viewpoints of what are the risk points, but there seems to be like so many. Most people would say there are risks out there that we're gonna have to kind of navigate here. And we've had another period of stellar U.S. market performance, and I think that whether it's virus related or not, I do think my view is, because I'm from the School of Austrian Economics, I'm very much of the view of there have been a lot of misallocation of resources. And how do you disentangle those? Can you disentangle those in a healthy way? Well, most likely, central banks don't like to see disentanglement. They just want to see smooth ride while I'm in the office. And I think that's a thing that's going to continue. I think a big question that people keep asking is, how long can that go on? Is there any way a stop to how much, and what I mean by that is economic stimulus, whether it's fiscal or monetary, to keep markets and economies looking healthy, but it's driven by this kind of government engine instead of the free market engine. And I think just figuring out what can be the fall of that regime, and them having to step back and say, we got to do this differently, something that they're never going to want to do. So it's not going to be the political choice. It's going to be, what is the actual economic consequences where you can't do this anymore? I think that's going to be the big question. And what's so great about that question is that it's not political. We don't have to you have to figure out the childhood of Jeremy Powell or thing like. No. We can actually, as economists, trying to figure that out. But it's the hardest one, and it's the most important question for the next year, I would say.
Great. What are your thoughts on this topic, Rich?
Well, I mean, I think that you're absolutely right that, to me, as I said earlier, the 2022 is going to be a year where we're really starting to see the central banks kind of remove some of this accommodation. And what we've seen historically when that happens is that's when we start to see where things do start to break. So I completely agree with Lotta about the misallocation of capital, but we don't usually see where the capital's been misallocated until we start to take some of that capital away. In 2022, if I think there's going to be anything this year, would be something along those lines, because we're already starting to see that in many of the emerging markets have been on a year-long tightening cycle. You mentioned China's starting to ease again, but it's the tightening that we're seeing from Brazil to Turkey, et cetera. We see the Bank of England starting to tighten, and now the Fed is slowly but surely going to be doing some amount of tightening. And so we will find out very quickly where the capital's been misallocated the worst, because those are the places that break the fastest. And so I think Lotta mentioned that we've had one of the better years in the market that we've kind of had this century for sure, but that doesn't mean that next year is going to be an equally good year. So I think, and I'm not suggesting that it's going to be a horrible bear market, but I just think it's one of those things where I think our members can use a lot of the content we've put out to make themselves smarter, to be alert to things that could go wrong. And if they start to go wrong, what are the questions they should be asking? And ultimately, I think that's what a lot of our content does, is helps people kind of think about what questions should I be asking when I'm thinking about investments.
Great insight. I definitely agree that some of the topics will be very attractive to certain group, and especially maybe right now I would like to talk about one of the biggest topics this year, and you also mentioned this, Rich, is about the ESG or impact investing. Rich, from your point of view, that what might be different from in ESG investments in year 2022 versus year 2021?
Well, I think I think the biggest thing is we learned from Fiona Reynolds, who was at the time CEO of the United Nations Principles of Responsible Investing, that more than 50% of the world's assets are tracking an ESG benchmark of some sort. And so while a lot of people might think, well, ESG is kind of cool, but it's maybe a flash in the pan, when 50% of the world's assets are tracking it, it's here to stay. And so I think it's something that these are the questions that people want to ask. You highlighted as well that maybe generationally, there is a millennial or Gen Z generation that cares a lot more deeply about a lot of these issues. And so I think that's one of the reasons why ESG will continue to take a foothold. Impact investing, I think, kind of near and dear to my heart. I mean, we've had Priya Parrish from Impact Engine on a couple times in the last 18 months. I mean, impact investing, Chicago is actually one of the homes to impact investing. I don't know if most people realize that. And it's the idea of, we need to have financial KPIs for any sort of investing, but we also need social KPIs or key performance indicators. And I think that type of idea, when you look at not just the environmental aspect, but the social aspect, as well as the governance, which has kind of always been there, these types of themes that continue through the market, I think, are starting people, whether they be asset owners like pensions and foundations and endowments, or they be asset managers, to say, this is something I need to take into account, because frankly, the main driver isn't governments forcing us to do this. The main driver is consumers. Consumers are telling you that this is what's important to them in terms of where they buy things and how they spend their money. And as we talked about the inflation, they're increasingly spending more money. So it's a bigger decision for them. So I think ESG is certainly something that's here to stay. We are embracing it as a society. You're seeing that it's no longer, we did a podcast theme on it this year, but I think what you're seeing in any company that you speak to, in any asset class, and you'll see it in all the presentations that we do in the coming year, is that ESG is just a part of everyone's business of investing these days, no matter what seat they sit in. And so I think that it's really just the permanence of it that's going to change the most this year.
Rich, I think you brought up a great point. A lot of people haven't really paid full attention to the ESG investing. Is they have a confusion between the social impact versus the return of ESG investments. They always try to tie to the ESG investment versus the alpha that traditionally involved with the investment. I think the social impact is a key component that from the CFA Institute or CFA charter holder point of view is something that we should embrace over the long haul, right? For few generations down the road.
You bring up a good point, and I think so many people, especially those from my generation, perhaps that think of ESG as something similar to socially responsible investing from last century, if you will, or early 2000s, which is really an exclusionary form of investing, right? That's saying, I won't invest in this sector or this country or that country. But ESG is so much different than that. It's so much more than that. It's being willing to invest in oil and gas companies, for instance, but engaging them very actively, saying you need to change the way you do business because this isn't sustainable longer term. And so I think ESG is a type of investing that isn't shying away or hiding or running away from some sectors that are maybe doing the bad thing. And I think allocators are also kind of jaded by that. They think, well, if I don't allocate to a certain sector, maybe I'm going to lag my benchmark, et cetera. But I think what you're finding is with those who are really measuring it the right way, and measurement error is a huge issue, as we found across, I think, all 11 of the ESG podcasts we did. Getting the right data is the biggest issue for most people. And we can talk about data because that's a big theme for the CFA, I think, as well. But getting the right data is important. But I think once things are measured properly, I think what you're finding is across asset classes, ESG investors want to engage with all companies and kind of point them in the right direction of what's important to them, because what's important to their investors and what's important to their consumers. Again, getting back to what's important to all stakeholders.
I echo that. I think getting the right data, especially from alternative data, is still key things, maybe key trends in financial industry as well over the year 2022. Lotta, what's your thought?
No, I would just echo what Rich has said. I'm not gonna repeat what he said on that one.
I would say from data, just think about the events that we've had this year, and the events that are on the calendar that you'll see this year. We've been very fortunate to have a panel discussion on data with some local experts from SIBO or from Morningstar. We're going to have the CEO from FactSet coming up. We've had the CEO from the S&P Dow Jones. We've had a lot of experts in data, and this is maybe more traditional data, presenting to our audience to tell us how the world of data is really changing in investment space. And we talked about it last week, and Tony, the two of us have talked about alternative data and the importance of that. And so I think data, where you get it, how you get it, and how you use it is certainly a major theme for all of us.
That's a really good one that you bring that up, and we want to do more about big data. So any suggestions from audience here will be appreciated. And as you mentioned, this is a broader theme for the whole society. We're all working together here because it's an overlooked area, and this is an area where for our members here who are becoming or are already CFA charter holders, understanding there's a lot of opportunities in the data space is really the kind of service that we want to give to you all too.
Especially CFA Society has invested significant amount of effort into this space, trying to bring our society member to get on board over this research and development of alternative data.
Yeah, and I know that we're running out of time, so I want to make sure also that I mention it's kind of have three things going on, right? We have the events, we have the podcast, we also have a discussion group, and this has been something we launched in the last year here, and it's such a success. This is John Morris and Christian Artuso organized this group. It's a limited attendance, and they will every month discuss a new topic. It's so popular, it's always full. And I've actually not attended this because I'm not fast enough, so you have to be fast enough. It's something that I want everybody to know. Also, it's out there, it's great, interactive. You're sitting actually in the group online so far and discussing different topics. It's always been good topics that they pick too. So that's another way of engaging, right, with us and others in these kind of dialogues that we're having right now.
Definitely. I think because this is the final episode of the year, I think we can maybe finish it in a very enjoyable way. If I want to ask maybe each one of you try to make a bold prediction for financial market, either micro or macro, for year 2022. What's in your mind?
You want to start, Rich?
Yeah, I'm more than happy to make bold predictions and bold forecasts, with the caveat knowing that all forecasts tend to be wrong, right? So, and that's what I always talk to my students about is we have to make forecasts for a living, but just understand that you're probably going to be wrong. And so do a scenario analysis, at least around that. But I think I would just kind of, as I've mentioned several times, I'm looking at the central bank tightening that's going on around the world, and perhaps it won't be as bad as feared because maybe everything's transitory. But if we start to get the tightening that's priced into the market, that's typically, to me, when things will start to break. And we talked about the misallocation of capital. And so my bold prediction is that Q1 is not going to be kind to the markets, because as this Fed is pulling back from the markets, what we know is that the value at risk that investment banks have to take, because they'll have to start buying treasuries instead of the central bank, will reduce the amount of risk that they can give to their investment counterparts, which we'll first start to see in credit markets and volatility markets. And I think that's the first place where we'll start to see things break. And it'll happen earlier in the year, because it's just really a mathematical function of as the Fed steps out and the investment banks have to step in and VAR gets reduced. And there's going to be a ripple effect to that. How bad it'll get, I don't know. I'm not going to try to put numbers on it, but I think that's something that I'm looking for.
That's an interesting one.
Yeah, the way I could tag on to that is just to contrast with, I believe that my view compared to Rich's here is that I don't think we're going to see as much tightening as people generally expect. It's just kind of a fact now that, well, we're going to see tightening. But as you said, once you start tightening a little bit, even just the expectation of, and we're not talking about tightening, we're generally thinking actually about tapering, which means keep expanding the money supply, keep buying the bonds just at a slower rate. If you start getting shaky, markets shake and all of that, we have been surprised before by how dovish central banks want to be. The latest surprise for me was China, that seemed to have been pursuing very much ideologically driven slowing of the economy in the name of equality and all of that, and came out pretty fast after you've had markets and the economy shaken as a result of that, and cutting rates and so on. I think that the theme of every round of markets starting to weaken because of any kind of tightening in, say, the US is always, oh, how surprising that they stepped in so quickly and saved the market, because market seems to be often what is the target of central banks. So I think that the cycle is becoming shorter and shorter in terms of between you get the stimulus and then you get the tapering and all that. And I think we might be able to see another cycle in the next year, at least in the next 2 years, of weakening, and therefore central banks stepping in again. And every time it seems to be more generous, so to speak, in how much they want to do to make markets happy. So I think that's it's possible, it's certainly possible, and I think it's quite probable that that's kind of that round of events that we saw back in when the corona first hit in early 2020. We're going to see similar things happening again, and we're going to be surprised again of how quickly central banks are willing to step in to save the day.
Great. Since both of you covered the prediction over the macroeconomic, so I would like to make one micro prediction, which I predict that Bitcoin will not be the largest crypto in year 2022. I think that's going to lead to one of the podcast series that Lotta and I are actually organizing. Hopefully that something could happen. This is one of my biggest predictions for year 2022.
And you said will not, right?
Will not, yeah. It will not become the largest crypto in terms of market cap in year 2022. Which one will come up? I don't know.
We're going to see crypto debasement then, is what you're saying.
It could be the central bank, one of the big central bank issue another digital currency that could change the whole thing.
Look forward to it.
Okay, so with that, I want to thank you so much for joining again. It's so great when you look back, you realize how much good stuff we're actually doing here, and together we work well as a team to put out the content that we hope that's going to be great for our members. So it's all good. Please, when you hear this, don't hesitate to, if you want, get involved. Look at the homepage, see what group you want to join. If you want to join us at the Educational Advisory Group, we'd be super happy to have you. Just send an email to the CFA Society Chicago, and they'll get you to the right spot. And you'll find the email on the homepage, as well as the notes to this podcast. So with that, Happy New Year, and look forward to all the great stuff that we'll be putting out in 2022.